Hello everyone, this is Juan Sarmiento and today is Friday, January the 21st. Okay, let's see. Unfortunately, I was doing some work here and my recording didn't work halfway through. It's happened before. I need to figure out why this happens. But you can see that I have done a few changes here on Home Depot and TER. Okay, so let's go through this COP first and analyze that. And you can see that all I have is a put expiring today. If you go to the account statement, you would see that this COP or here, we already have made our money on that as the stock went up. So when the stock came down, it hasn't come down anywhere near my puts here, which are expired. It's 65 strike price. The stock is trading at 83, so it simply will expire. Worthless. It was a lottery ticket. That's why I left it. Let's go to Home Depot. Go to the monitor tab and activity. And here you can see that I already did some work, and so I'm going to show you what I did. Let's go to analyze trade and copy our little trades here. And this, you can see that I had a single 370 put. Okay, so here's the strike price for that. And the strike price, the original strike price was 410. So I had already rolled it down. So today I was rolling it further down to 350 and it got filled. Okay, so this is what you do. You simply select that put and say analyze rolling and then adjust to make it look like this. Same expiration, same type of option, in this case puts, and you roll it down from 370, that's what I actually had, to a lower strike price, usually at around the current market price. And in this case, I went even lower, and that's a way to change my deltas quite a bit. It may go from negative to positive. So that's what you got here. I still felt that it was still too high. And so now we have that outstanding 350 put, so we can sell a put against it at a lower strike price. So I sold this 345. Let me just show you here, 345. So analyze that. And here it is. Okay, let me disregard that. And this is what the trade looks like. So I sold a February 22nd, February the 4th, 2022 at 345. So then that little portion of it becomes a diagonal. You can look at it like this. Select the 350 and select the 345. That's a diagonal. It's still bearish. I mean, as the stock continues to go down, it could land in the cone here, and my short, the February short, could expire worthless because it has 2 weeks to go, but the long goes all the way to the 18th, so it has more time to work. You can sell more puts against it. When this is about to expire, you can roll it over. And that's a way to overall reduce or increase my delta to make it more positive. And you can see that it's more neutral, close to 4. Okay, so I adjusted in such a way that my deltas are more neutral because I feel that Home Depot has fallen significantly and now it could go sideways to higher. And this is a way to control that. And in the process, if you go to the account statement, Home Depot highlighted here, you can see that the market value of the trade now is only $506.50. So by doing all those transformations, I took some credit and reduced the overall cost of the trade, current value of the market value of the trade. But that could increase now, and we could take profits again at some point. Overall, year to date, we have $611 on that trade. That's Home Depot. On TER, let me see what I did. Go to account and positions here. and I simply sold 2 puts. That's a way to take profits. Let me just show you. Analyze that. Yeah. I simply added that put because we have this January 21 put expiring today. Get it? This is what it looks like, the trade, provided that this put, January 21st, 135 put, expires. And it would expire in all likelihood. Is only a few hours away. The stock is trading at 148 and that put is 135. So let's say it goes away. This is what the trade looks like. Literally, this is what it looks like until that put goes away. Okay, but that's today. It's all like in all likelihood going to go away. Then we have this call that expires today, and we would be assigned short shares if we don't close that. Okay, so I already organized here a rollover, and I'm going to reduce my ask because it's at 420 and it's trading at 415. So let's change that. And you can see that the difference between natural and mid is really, really wide. So don't be afraid to lower that. Let's lower it to somewhere in between, like 370 to whatever, some random number, confirm and send, and see if you'll get filled. And keep on lowering it, let's say by 5 increments, 5-cent increments until it gets filled. Okay, let's go to UPS. Analyze that, and on UPS there's a series of trades. So what it looks like here is not the right trade. You see, to go to the monitor tab, account statement, and I go 100 days back, and you see that I have actually done a couple of rollovers here. 1, 2, 3. So the original trade plus 2 rollovers. So you, from this debit of 40.25, you subtract this price and that price, okay, provided that you have the same number of options there, and this is what you get, 27.33. And so you hide the current position so that the simulation is what is really the history of our entire trade, and this is how much money you made, and then you decide, well, it's delta positive, so a little bounce on the market will not be too bad if it goes back to 10. If the market continues to go lower, well, we would hope that volatility will continue to increase, and if it does, then this you can adjust the volatility here. If you imagine that the volatility goes another 10% higher, yeah, we increase our gains. Okay, so I'm happy with that. The options on the expire on the 28th. That's a week from now. You can do a rollover right now, or you can wait until next week. Well, I suggest we do the rollover on the put side and leave the call side alone to do that next week. Okay, so let's do the rollover of the put side. Analyze rolling, and we're going to do this to February the 4th or 14 or 25, let's see, yeah, the 18th. Okay, and so we get $4.67 on that rollover. Okay, and I'll check this before the end of the day to make sure we get that. Okay, we get that filled. But I'm not going to waste your time, so that's what you do essentially. Roll the put side, and because the put side is in the money, the call side is not. And then next week the market could bounce, and then we could do that rollover, or simply add, like we did the put side for the TER. You could simply add additional puts, but we'll discuss that next week. Let's go to this is Wells Fargo. Okay, Wells Fargo. Again, we have several trades on that. No, that is the same trade. Okay, so let's go to the Analyze tab. This expires on the February the 18th. There's plenty of time for that. And this is what we have, okay? It's a loser right now, but it's pretty static. Let's go take a look at the chart. Yeah, I think that stock could go lower to the Ichimoku cloud. Could, strong word there. The stochastic is pointing down, volatility is on the rise, so that's what we want to see for the next trade. Okay, that's all. I'm not entering new trades until the volatility. Take a look at the VIX. Okay, until the volatility comes down, it's not advisable to enter new trades. We should be actually taking profits because the volatility could collapse. And what we want to do is neutralize our deltas, sell those puts that are expensive right now, okay? Because the volatility is high. That's all for today. And if volatility continues, let me just add that if the volatility continues to rise, those puts will appreciate more, and then those trades will become, even though they're neutral now, they will appreciate. Okay, that's all. Thank you very much for joining me. See you next time. Bye-bye.